All right, good afternoon. Welcome back here to Trader Mini. Great to have you aboard. Let's go take a look at a couple things here, and I'm not going to take too much time as we'll set up Carl for his top three at 1 o'clock here Mountain or 3 o'clock Eastern. And I know he's got some good stuff here for you. Let's start here though with MRO. Most common email that I've had today is it too late to get into MRO? And MRO's been all over the place today, right? I mean, it's been up 60 cents, it's been flat. In fact, it went from up 60 cents to negative. Now it's up 23 cents. It's kind of been all over the place. If we kind of zoom this in from an hourly perspective, it's not in a bad spot. Does it have a chance of rolling back to about 36.50, 36.40 area? Yeah. Anytime you're talking about a stock that breaks out, whatever time period you're talking about. So here with MRO, we saw that kind of break out Friday, up above some of its highs for November. Anytime you're talking about a stock that breaks out, it's never really smooth, meaning it'll shoot up and then it'll come back. Sometimes it'll come back and retest the breakout level. Okay, go and retest that area before shooting up, and it's always a case of, well, where's it going to test? Can you get a little cheaper price? Can you get a little cheaper price? Where is that? The bottom line here for MRO is whether it's here, whether it's down another 20 cents or even up another 20 cents, the risk reward on it makes sense. Okay. The options over $2, it's a little bit different than what it was Friday, but the risk reward with a price target of 39 still makes a lot of sense uh, given the MRO trade. And so, while part of the challenge is we just show you what we do. Again, we're not financial advisors to recommend getting into trades and different things like that. As your needs may be different. We still like the trade. We're still in it, so we like the setup, and we'll continue to ride that. Now, why the activity on it today? Why the shot up and shot down? Well, one of the things that happened when MRO fell here today is just take a look here at oil, the price of oil. Price of oil this morning started to shoot up, went all the way up to almost 95, and this is West Texas, the light sweet crude futures, went all the way up almost to 95, and then fell about $1.70. Those of you out there are futures traders, you're probably watching or on some of this action here, strongly to the downside. And you'll notice MRO about the same time it did that. Okay, it overreacted to the downside a little bit, retested, it's come back up. It'll move here, but it's not anything that is overly concerning from a downside standpoint. Okay, I was emailed. I was asked, was there any signs that the top was here at 37? Well, I mean, there's some small signs in regard to volume. We saw some of the volumes build up here at 37, and typically building volume marks a top or a bottom. But again, MRO is not a day trade for us. We're looking to hold this through the week. I'd love to hold it till about Friday, see it trading up above 38 into 39 area there. Okay. See, Darren, I got your email that you sent me, and you told me to keep MRO from going up until tomorrow. So, I'm trying. I'm just playing. But as far as MRO here overall, it's still in a very strong position, regardless. Okay. Yeah, with some of the pivots, yeah, option snipe, but yeah, some temporary resistance up there at 37. Yeah, absolutely. Absolutely. And when you kind of come back, we talked about when we entered the trade here on MRO. Okay. And let me see if I can change the color here. Yeah, there we go. But we talked about these levels right back here in July and how MRO came up and hit into 37, up into these areas and fell. We talked about how this is some small resistance area. Well, why isn't it a major resistance area? Well, simply because of the volumes. Notice the complete lack of volume up here. typically a resistance area will have some significant volume. Now you can make a little bit of argument with some of the earnings gap down and whatnot that it had in August, but it is very light, very small overall there for MRO. Okay. All right, so that's Marathon. Let's take a look at a couple others here. Tesla. Okay, I know some of you are riding to the downside. We looked at this as making it our first challenge trade, Tesla puts, but couldn't do it because of the gap risk. But Tesla's down $8. Look, I believe Tesla goes to double digits. I typed in single digits. That might be aggressive, but I think it breaks 100. Does it do it right away? Will it be volatile on the way down? Yeah, absolutely. It'll be volatile. So you're up nicely. Take some, ride the rest, whatever you have there. So, but I do think that it does break 100. Not that I'm bearish on Tesla or think Tesla is a terrible company or anything like that, but that's some of the price action that we see on some of these, giant movers. Once they start to pull back, they can exaggerate to the downside in a very big way here. Okay. Honeywell. Okay, Honeywell breaking out to the upside. Trend Rider Bull. We've talked about Honeywell. We talked about it since back here on Wednesday. Had we started the challenge on Wednesday, we would have done Honeywell as our first challenge trade. And, it's off to the races and doing very well. Would I argue anybody who wants to enter it right here? No, I wouldn't. Okay. All right, I want to peel back all my indicators on the chart here and talk about the 7-day moving average. I've promised several of you that I do this, so let's go take a look at it. And I'm going to take off volume and everything else, and the only thing I'm going to put on this chart is a simple 7-day moving average. Okay. What's a simple moving average? Well, they basically take the price of the stock, okay, over the last 7 days, divide it by 7, and that's where they draw this blue line that you see running through here. Okay, let's just take it with MRO, for example. Okay. Now, there's nothing magical about this line. Okay, it's not some big trading secret. It's not the next greatest thing out there or anything like that. The 7-day moving average is a very simple metric that we used back in our fund managing days, just simply to help us to understand the risk. And in general, a stock that's trading above the 7-day moving average tends to go higher, and a stock moving below the 7 tends to go lower. And a lot of times stocks, when they're about to pivot or they hit a pivot price or something like that, they're moving from from a run up to a run down. A lot of times you'll see that happen where you'll be moving up and then it'll start to push the 7-day moving average. Once it breaks the 7, you can tend to see things move. Okay. Yeah, DWT, are we including today's price among the 7-day closes? You know what, DWT, if you do or if you don't, it doesn't change the calculation very much overall, except for in a few instances. But here at Stock Charts, they're giving us today's action on there too. So it does include today's price action. Yeah. Okay, so this 7-day moving average, nothing magical, but one of the things that will happen, okay, when a stock is in a consolidation period, let's take, give me a stock that's consolidating. Sorry, I went brain dead here for a moment. Caterpillar, okay? We have a stock that has been consolidating. We've talked about having every reason in the world to fall except for the stock buyback. And now it's starting to gain those legs higher and breaking out to the upside. But notice how it would move up above the 7, back below, up above, back below, keep whipsawing around the 7. When a stock is in consolidation mode, the 7 means nothing. What does the 7 do? It tells us, you know what, maybe the stock is ready to move. Okay, the stock is ready to move. And stocks will go from trend to consolidation, to trend to consolidation. And depending on whose writings you read, some will say that stocks tend to consolidate for 60% of the time and trend for 40% of the time, which seems about right. Okay. So if you're taking something like Honeywell, right? It had been consolidating, showing signs, getting ready to break out. Okay, now you're going to ride the breakout. What's the best way to ride it? Well, hey, how do you know if the pullback's significant? Well, it breaks the 7. Once it breaks the 7, there's some added risk there. Now, riding the 7, you're not going to be able to call the top. Okay? And in fact, there are a lot of cases where you'll actually see a stock get too far above the 7, maybe put a bearish candle on there, and then you got to get a little nervous. Okay, you start to elevate too far above the 7, you get some sort of mean reversion, where you kind of pull back to the mean. One of the most simple trading strategies out there. Okay, one of the most simple trading strategies, and one that when I struggle, I'll resort to a little bit, but is to come in here and put on a simple moving average of 3 days. Okay, and then just take off your candles. So I'm going to turn this chart to invisible. I don't care what the candles are. So I'll put a 7-day and a 3-day moving average. Okay, and here's the whole idea. Okay, here's the whole idea. You want to buy when the 3-day moving average breaks above the 7, and sell when the 3-day moving average breaks below the 7. Okay. In general, you're going to get some whipsaws. Okay, there'll be some whipsaws. There'll be some periods like this back here in May, June, July. Whipsawed in, whipsawed out. You can add an indicator like the ADX or something like that. Okay, to help you avoid some of these types of whipsaws. But in general, okay, if you're playing the bullish side of things, the odds are in your favor if the 3-day moving average is trading above the 7. And from a principal standpoint, all that's saying is that the stock's accelerating to the upside. Okay, so if we take a look at something like MRO in this context, okay, MRO, you'll notice, okay, the 3-day is trading above the 7. Now it's been a little more volatile on this move up as they've had earnings and whatnot, but we still have that very bullish price action there. Okay. Take a look at something like Tesla. Okay. Well, what's been happening? Well, Tesla started to weaken, lower highs, lower lows, and that 3 throughout this whole time continues to trade below the 7, continues to be very bearish here overall for Tesla. Okay. So that can just be a very simple tool to use to say, hey, you know what, is your stock in a bearish position or a bullish position in the short term? Okay, please don't take a long-term holding that you've been holding for 3 years and say, well, the 3 moved above the 7 or vice versa, so I got to change my position. No, this is very, very short-term and really good for more trending type of environments. Yeah, Jay, you need MRO to come back a little more here to get in. Okay, good deal. Good deal. Thanks, Option Snipper. Yeah, for MRO, are you going to get in below 2? Do you have that chance? Yeah, you do. I mean, can the options fall below 2? Absolutely. Absolutely they can. Okay. Now, I don't expect that, in a big way here, but take a look at Apple. Okay, even just at this little 3-7, notice it kind of breaking up above as Apple's broken up just a little bit. Yeah, Apple's been consolidating here, but it's in a bullish mode overall as the 3 trades above the 7 and as the stock price itself trades above the 7. Okay. Was asked if I'm considering any trades into the close, and yes, I am. And Apple's one of those that I'm strongly considering. Very strongly considering to the upside here for the challenge. Love the price action overall on the hourly. Went down, didn't quite get down to 520. Was hoping it would get to 520, but didn't quite get there yet. Yeah, Yoku. Yeah, this one, I mean, it moves, right? I mean, if you followed Yoku for more than an hour, you know that this thing is just this thing can be a beast as far as moving. The options tend to be a little more expensive. It continues to be in a very bullish position, but this is one of those times where I go, okay, here's the seven. Look how far away it is from the seven. Doesn't mean Yoku has to come down. Okay, it can still keep going, but I always get nervous to buy a stock that's 10% away from the 7-day moving average. They start to pull back. That's that can be painful because even at 30 it's bullish, at 29 it's bullish, and that can be pretty painful there. Okay. MRO 36 strike. Would that give better risk reward? It'll give you a little more risk overall, but reward wise, yeah, it'll give you a pretty good reward potential. MRO up to 39, you'll get more reward off of the December 36 than you will off the 35s, but just slightly. Okay, just slightly. Yeah, Jay, Tesla or Apple. Look, I love Tesla's setup here. I mean, did I like it more Friday than today? Yeah. Um, if I had gotten into it Friday, would I be getting out today? No, not at all. Okay. Alrighty. Well, so I mean, the seven as you're looking at it, please. Nothing magical, but it's one of those things when you're riding a trend can help you manage the risk. Okay. So in the context of our trade on MRO, we continue to hold the seven. We'll continue to look for it to go higher. Is the seven the be all end all? No, it's not. It absolutely is not. Would I get concerned if it broke the seven tomorrow or Wednesday? Absolutely. Absolutely. All right. Well, Carl will be on for his top three here at 3 o'clock Eastern. I will get on afterwards, and we'll look at potentially another play for the challenge. Again, I love the setup here on Apple. Love the setup here on Apple. So we'll see where that is near the close overall here to the upside. And just from a risk reward standpoint, it's setting up very, very nicely. Thanks for hopping on, and we'll talk to you soon. Take care.